Good morning everybody, how are we? Just our usual risk disclosure. Please understand that today's session is of a general advice only and that your personal circumstances have not been taken into consideration. Alright, let us get started straight away and let's have a look at what's coming up on the news front for this week. Now, last week was a particular strong week for the US dollar. Pretty much went strong against most currencies. The only real exception was the Kiwi dollar, and a lot of the points of view from most analysts around the world is that the US dollar is now in a position where most investors, traders, speculators, fund managers and so forth are positioning themselves for an interest rate rise in June rather than September. There is a bit of data coming out this week on the US front. Now, should some of these numbers miss the mark, now particularly like the retail sales, they're foreseeing an increase from the last quarter. If that increase sort of disappoints, let's say, we could see a pullback in the US dollar, particularly with the US dollar, because so many people, it just appears that so many have positioned themselves for that interest rate rise, that any data that kind of does not hit the mark or disappoints, we could see an adverse effect and we could see a retracement of currencies against the US dollar, and mainly because of what's happened last week. Now, the RBA announcement from last week, it kind of, it moved, but there was no movement in the rate decision. The currency did move up and down on the day. Aussie dollar is holding ground. We'll have a look at the charts when we get to it, but there is a bit of Aussie data coming out here. Employment rate is always one that might do a couple of things for us. On the US front, what I mentioned earlier was the retail sales. On the euro, we have their interest rate decision. This will be an interesting one. It's kind of like the QE program that started in March. It's going to start to show some signs, and it'll be interesting to see what they do. Not much is expected. Most are expecting that they will remain at the levels that they are. Alright, but I guess for this particular week there is so much US data, okay, unemployment claims and then CPI figures towards the end of the week. It's going to be an interesting one. I think with a combination of US data, Aussie data and Chinese figures, the one in the spotlight for us this week is going to be the Aussie dollar USD again. Alright, so this is probably going to be the pair that is going to be most affected by data this particular week. Alright, so make sure that you make a time adjustment and adjust to your local time of when this data is going to come out. Let's get straight into it now and let's have a look at our charts. Let's see what we've got happening, and we'll start off with the Aussie dollar. Last week on the Aussie dollar we drew these set of lines predominantly because we had broken a higher high and a lower low. These lines are still not locked in. They can move up and down. I've just got them in there just to give me an idea of what I think is going to happen on the market, and at the moment it's playing out. This is the area somewhere in here that I'm going to be looking for a candle with a fractal to be able to take a position down. Now, as I need a candle that has a fractal like this before I can lock in the top line and the bottom line. I still do not have them, so I'm going to play it out. Aussie dollar, like I said, this week is going to be probably the one most under scrutiny due to data. So right now I don't have anything. I don't really want to play it. I have just come out of an expanding trading area and I'm waiting for the trading area to converge back before I can look for trade. So what I'm going to be looking for, like I said, in this area there, I'm looking for a candle with a fractal and then followed by an inside candle so that I can see if I can take a trade downwards. Should that not occur below that level there, what then comes into play is that we break that high and then we're going to be looking for a pullback and continuation in this direction. I think that is probably 2 weeks away, but the trade for this week is probably going to be that one there, or look for it down here, because this could now come back down and it could play out as a double bottom, but your clue is going to be a candle with the fractal at the bottom for here, or a candle with a fractal at the top. Until you see that, nothing happens. Alright, so that's pretty much all I've got for you, Aussie dollar, for this week. If I do see something and I'm in a position where I have internet or I'm not too remote, I will push it out for you. Alright, let's move on. EURUSD. The EURUSD is probably one that suffered the most against the US dollar. It's basically had 5 consecutive down days. I blacked out this area for us last week of what I thought would be a consolidating region. It has in fact played out exactly as we said. It's unfortunate we didn't get a trade opportunity at the top there. So what you're going to be looking for now is you are going to be looking for a trade opportunity over here in this area. See if you can possibly see something down there. Okay, so that's particularly what we're looking for. See if you can get some kind of a bounce into this region and trade off that. Alternatively, what can happen is we could break straight down, and then that opens up another trading area. That would, if that does in fact happen, it puts the parity back into play. Okay, so depending on what happens with the ECB meetings that's due for this week, and the nature and the actual data that is delivered from the US front, that could also come into play. Okay, so for EURUSD this week, what we have is look for a bounce off a double bottom with a fractal, or if you get a straight break, then the down trade becomes an option for you as well. So that's pretty much, this one looks like it could happen. We're very close to that area right now, so possibly in a day or two. Okay, so that's EURUSD. Let's have a look at GBPUSD. And we drew this line last week on the GBPUSD. We locked it in because of that candle fractal. We got a break and there was a little trade right there, okay, down. We've taken out this low as well, and essentially we've basically taken out a 5-year low. If I go out and really zoom out of this chart, it's the lowest it's been is for a long time. GBPUSD. The nature of these two candles looks really good. We have taken that out, so if anybody took that trade right there, possibly you might have taken some profit out right now at around about this level, but the door's really open for now for that 140 region, 45 region down lower. Okay, so now if you have not taken that trade, let me get rid of these lines now because they're no longer relevant. That broke out and this one has not held. The lines that I'm kind of liking at the moment, if you want to project the target, possibly in here, if you're still in that trade, that will give you a target of about 144. if you're still in it. And I think we can start to play inside of this parallel lines. Alright, so the first break has already happened, as I already said, down there south. If you're still in it, take some profit. The levels are good right now, but this could be the second target area. And then at that area, start to look for a bounce inside of that channel. Alright, so that's pretty much all I have for you for the GBPUSD. It's starting to pan into a nice little pattern, as you can see right there. So let's see if we can play inside these parallel lines. The next trade to come along is going to be down here, unless it starts to pull up straight away. If it starts to pull up straight away, we'll then look for a trade in that area up there as well. Alright, let's move on. Gold. Gold daily chart I'm looking at here, and the only real thing that I've noticed is that we're starting to get a little bit of a top there. We've got 1, 2, 3 areas, and then we're starting to get this triangle that's narrowing in on itself. So if this was to play out as per textbook, what would happen is it'll come in there like that and then shoot back down to roughly this level there. That would be a textbook trade. Of course, it can break in the other direction. Typically when I get this kind of a setup, I don't trade the top break. I look for this bottom break down there. Alright, so what you would be looking for is probably a little bit one more effort towards the top, and then we need a candle that cleans out that line cleanly, and then basically take your trade from that point onwards. Alright, it's the only thing that I have for gold for you. If this was to come down, it would coincide with a dollar weakness, US dollar weakness, that is. So if you see that the US dollar weakens, dollar strength, apologies, you will see that gold will come down in this direction. Okay, so that's what I have for you on gold. Just keep an eye on it. I do think I would like it to basically come in towards the top one more time before it makes the move downwards. Okay, US yen. US yen, we've been tracking this zone, and what I'm going to do today is I've noticed I'm going to remodify it, and I'm going to come in and zoom in on this little area over here. Let me zoom in. It's a narrower range, and mainly because the US dollar is a little bit sensitive this week. So if I'm going to try and trade a break out of this area, so for example, if we were to get the US dollar weakness because the data that we were looking for didn't quite hit the mark and it disappointed the market, then the trade that we would be looking for is a clean break down the bottom and then basically hit it down. So as soon as we get a clean break out of this little area, hit it down. That area is around about the 1850. Okay, 118.50 is that marker there. That's what we would be looking for. Alternatively, the push upwards I think is probably going to be weaker this week. It appears that the US dollar, if it's going to move rapidly this week, it looks more likely that it would move rapidly downwards rather than upwards. If it moves upwards, it does not appear that it will be a rapid move. It would be a slower move upwards, but a much more rapid move downwards. The reasoning for that is that everybody is already positioned into the trade, so there's a lot of long positions US dollar. So that means if any data disappoints, those people jump out of the trade very, very quickly, which makes it fall quicker. But if the data comes in on target, more people add to the trade and it continues to go up, but it goes up at a slower rate. Alright, so if I'm looking for a break out of this particular little area that I've drawn, the only break that I'm interested in is the downward break, because it's got to be a faster movement, and that's the trade that I'm looking for. Alright, so that's all I have US yen this week. Let's move to the Euro yen. Euro yen, we drew out this congested zone last week. We were unlucky not to get a trade out of that top there. The top held. It is now coming back to the bottom, so let me just extend this out a little bit. And with the euro yen, I'm happy to trade a couple of things. I'm happy to trade here. First one is if I get the break, like a candle down there, I'm happy to trade that. That's the first option. Second option, if this candle gets a fractal and then I get another candle over there, I'm happy to trade it back up. Okay, that's the second option that I'm happy to do. If this happens and it gets back to the top, once we get back to the top, I'm considering a recovery in the euro and pushing beyond that top as well. Now this one's probably 2 weeks away, so let's get rid of that, but just so that you have a plan in your head. The plan is I will trade a break down. It has to be a clean break, like I said, down. Alternatively, if I get a fractal on this candle or the very next candle, provided that it does not go too far below this level, then I will be happy to trade it as an inside candle or an engulfing candle if I get it back up into the range and make it a range trade. There's plenty of room in there. There's about 400 pips in there, so I'm not worried about the width of that congested zone because there's plenty of room for me to trade inside that area. Alright, that's what we have, euro yen, for this week. And finally, let's have a quick look at the Kiwi dollar. Now the Kiwi dollar, I'm on a 4-hour chart. Clearly you can see from my chart I've got a converging triangle happening. I've got a couple of touches. Now notice the areas that I'm using for my touches have got a fractal. See the fractal right there? Up there, look at all the fractals. 1, 2, there's lots and lots of areas there. So this zone is quite valid. Now, what am I looking for? What would I prefer? I'm actually preferring this. I don't really mind if I get it the other way as well, but I'm just preferring it in a downward way. The Kiwi dollar has been strengthening against the US dollar, which is a little bit strange. So I just get a feeling that maybe things will just get back into alignment, and the break downward could be nicer than the break upwards. Of course, the break downwards would mean that there is a weakness in the US dollar, which, like I said before, weakness in the US dollar this week I think is going to be a faster accelerating than increase in US dollar, and mainly just due to position that the traders and speculators have already started to get themselves involved in preparation for perhaps a June interest rate rise rather than a September interest rate rise. Okay, so for the way that we would play this one out, we want a clean break. Now, two options with this one: you can just take the clean break right there, or get the break, wait for the pullback, and then take your trade. The second option is more conservative. Second option sometimes doesn't allow you to get into the trade because once we get the clean break, it just moves away directly. Alright, possible target areas for this trade, you'd be looking in this area down here, which is around about the 73, so there's plenty of room for the trade. The trade could start at about 74.60 to about 73. There's about 150, 160 pips in that trade. Alright, so keep an eye on that one. Keep it on your radar. It is one that's going to pop. It's ready. It's building, and it's been building for about a good week and a half, 2 weeks. So this is a nice one. Okay, that's pretty much all I have for this week. I know these particular last 3 weeks have been a little bit faster than normal. They've been pre-recorded. I'm recording this It's approximately 4 a.m. my local time on Saturday. Next week's class should be live. I will be back, so I will send out the invites as always, and the class should be live. But if you have any questions, please send them through. I have been responding, and make sure that you're aware of the times for any news that will affect you. There they are again for you. And that's all I have for you. Have a fantastic week. I will send something out for Thursday, and next week I'll be back live. Take care. Speak to you soon. Bye for now.